When you first pull up a trading chart, you just expect to see pure, unbiased data. It's just numbers, right? You look at those red and green candles, the moving averages, the volume bars, and you think you're looking at cold, hard mathematics.
Right. I mean, it certainly feels that way at first glance. It feels like you're simply reading a weather report.
Yeah.
You know, you look at it and say, okay, there's a 70% chance of rain or 70% chance this asset moves up.
Yeah, it's incredibly sterile.
Exactly. Very sterile and objective.
But then you actually enter the trade. The capital is live. And suddenly those sterile numbers start ticking against you. Your heart rate spikes.
Oh, yeah, your palms start to sweat. You get that knot right in your stomach.
Right. And in that exact second, you realize you aren't looking at math at all. You are looking directly into a mirror of human emotion.
Which is really the absolute core of the issue. The market is the ultimate psychological mirror. It reflects your deepest insecurities, your greed, and your fear, all in real time.
That is exactly what we are unpacking today. Welcome to a brand new deep dive right here on the Handsome Trader channel. We are so thrilled to have you with us.
It's great to be here.
Before we really jump in, if you get value out of this conversation, please take a quick second to hit the like button, share this with a fellow trader who might need to hear it, and subscribe to the channel. We truly appreciate the support.
It really does help out.
So today, our mission is to explore the hidden driver behind every successful and catastrophic financial trade. We're talking about human psychology. Joining me is Marcus, a veteran financial trader and performance psychology advisor.
Thanks for having me on. I'm really looking forward to getting into this.
Same here. We're going to break down why the vast majority of traders fail. And spoiler alert, it's not because their strategies are bad, right?
No, not at all. It's because of their own minds. The irony of trading is that it's marketed as this purely financial endeavor, but it's actually an exercise in supreme self-mastery.
Which is wild to think about.
It is. I mean, we can spend an entire lifetime avoiding our psychological demons in the real world. But the moment you sit down at a trading desk and put your hard-earned money on the line, those demons are going to stalk you.
Let's start right there with those demons. We need to figure out why we react so irrationally to numbers on a screen, because logically, we know better.
We do, but logic isn't driving the bus. The answer, incredibly, goes all the way back to evolutionary biology. We are basically trying to trade complex financial derivatives using a brain that is roughly 6 to 8 million years old.
Wait, 6 to 8 million?
Yeah. Think about what that primitive brain was actually designed to do. It was built for survival on the African savanna. Its primary function is to act on immediate instinct in the present moment just to keep you alive.
So it's not exactly optimized for day trading tech stocks?
Not even close. And here's the kicker. Neurobiology tells us that 95% of the decisions we make every single day don't actually process through our logical cognitive thinking.
Wait, 95%?
Yes. They completely bypass the prefrontal cortex entirely. They are emotionally based instincts coming directly from the amygdala, which is that very ancient, primitive part of the brain.
Okay, let's unpack this, because it's like we're bringing a wooden club to a chess match.
That's a perfect way to put it.
But I have to push back a little here, Marcus. This is where a lot of people get tripped up. There is absolutely zero physical danger in trading.
Right, physically, you're fine.
Yeah, I mean, I'm literally sitting safely in an ergonomic chair, holding a warm cup of coffee, just looking at a monitor. Why in the world is my brain treating a margin call like a physical predator?
Well, because your primitive brain is incredibly powerful, but it's not very good at nuance. It literally cannot tell the difference between a modern financial risk and a literal threat to your biological life.
Really? It just lumps them together.
Exactly. To a caveman, a threat to self meant a physical predator. It meant destruction. Today, in our modern society, money represents our survival. It dictates our shelter, our food, our status.
Oh, wow. I see where you're going with this.
Right. So a threat to your trading capital is processed by the exact same neural pathways. When a trade starts going against you, your brain genuinely reacts as if a saber-toothed tiger has just walked into your home office.
That is terrifying.
It is. The body just starts pumping cortisol and adrenaline. It completely shuts down your logical mind, and it triggers a massive fight, flight, or freeze response.
Okay, so that perfectly explains the sheer panic of a losing trade. But what about when we're winning? Because let me tell you, hitting a massive green candle feels just as intense, just, in a different way.
Oh, absolutely. That is what we often call the woolly mammoth response.
The woolly mammoth.
Yeah. Imagine you and your primitive tribe are out hunting, and you spot a woolly mammoth. Now, if you can actually take this massive beast down, it's going to feed your entire village for months.
Right, it's the ultimate jackpot.
Exactly. You'll survive the winter, you'll gain immense status, you'll be a hero. But it's an incredibly dangerous animal. To muster the courage to actually attack it, your brain has to get you completely cranked up.
Yeah. It has to force you to ignore the danger.
Yes. It floods your system with excitement and dopamine to completely override the immense physical risk.
Man, it's like being on a hot streak at a casino. You get this tunnel vision where you only see the chips piling up on the table.
Right, and you become completely blind to the fact that the house still has the edge.
Exactly. Traders do the exact same thing, don't they?
They really do. When they see a setup for a potential massive win, they get overly hyped. Their emotions surge, and they completely blind themselves to the downside risk. They are so focused on the meat of the mammoth that they forget the mammoth can crush them.
Which brings us to a really fascinating paradox here. If our primitive survival instincts are the core problem, you would naturally assume that the people who conquer the business world would just absolutely dominate the markets.
You would think so, yeah.
Right. The alphas. The highly driven, successful CEOs and entrepreneurs who are literally trained to dominate their environments, force their will, and, control outcomes.
But looking at the data, the exact opposite is actually true.
Really? Does treating trading like a business actually doom you from the start?
It is one of the hardest pills for successful professionals to swallow. Trading is fundamentally a game of probability, not certainty.
Okay, break that down for me.
Well, the alpha business leader is conditioned to believe they can control the outcome. If a marketing campaign fails, they just hustle harder. If a deal is falling through, they negotiate more aggressively.
They believe they can bend reality through sheer willpower.
Exactly. But the financial markets do not care about your willpower. I always tell my clients, you cannot negotiate with a candlestick.
That's hilarious, and it's so true. I've actually seen a perfect example of this in the case studies. There was this highly successful serial entrepreneur.
Oh, I know the exact case you're talking about.
Yeah, this guy had sold a bar business for like $500,000 right out of college. He eventually builds a multi-million-dollar cash position. He looks at day trading, sees it's a capital-intensive endeavor, and thinks, well, I have the capital.
Right. He thinks, I know how to build businesses. I'm a winner. This is going to be easy.
Exactly. And what happened to him?
4 years later, that same alpha entrepreneur was making absolutely no money in the markets. Zero.
Wow. 4 years and nothing to show for it. Because he completely refused to give up control, right?
Precisely. He couldn't accept that the market dictated the terms, not him.
It feels like trying to force the rules of Newtonian physics, where everything is predictable and reacts to force onto quantum mechanics, where everything is just this cloudy mess of probabilities.
That is a phenomenal analogy. If you try to force certainty onto the market, it just blows up in your face.
So you just can't treat it like a traditional business at all.
Well, to be fair, trading is transactional. You have a return on investment, you have overhead, you pay taxes. So in that logistical sense, it is a business.
Okay, sure.
But the mindset of a traditional business person is fundamentally incompatible with a probability-based environment. In business, you strive for perfection. You aim to win every single time.
And in trading?
In trading, to actually survive, you have to become what we call an accomplished loser.
An accomplished loser. Man, I love that phrase, but it sounds completely backwards to everything we're taught. I mean, we are taught to despise losing.
We really are. But an accomplished loser is someone who has mastered the art of protecting their nickels and dimes. They have totally decoupled losing from failure.
So they just accept the small cuts?
Yes. They keep their losses very small, they accept them gracefully, and they just wait patiently for the probabilities to align in their favor. Perfectionism in trading isn't a strength at all.
What is it then?
Perfectionism is just a mask for an underlying anxiety about being wrong.
Oh man, let's pull on that thread because this goes way deeper than just business habits. If pure logic doesn't work and business hustle doesn't work, what hidden forces are actually dictating our behavior when we hit the buy button?
This is where we get into the really deep stuff.
It seems like we are basically bringing our family's dinner table baggage into the financial markets.
We absolutely are. It gets highly personal very quickly. We absorb our deepest foundational beliefs about money, about our place in the world, and about our own self-worth from our early childhood environments.
So we're essentially programmed before we even open a brokerage account.
Exactly. Your brain literally leave-wires itself to adapt to the rules of the culture and the family you grew up in.
There's a really poignant case study about a trader from Detroit that perfectly illustrates
I follow
this.
the blue-collar guy. Yeah.
Yeah, he came from a very blue-collar auto factory family. Growing up, he constantly heard his father complain about the wealthy executives at the car companies.
Right, and without realizing it, he internalized this deep-seated belief
Yeah.
that wealth is somewhat immoral, or that nobody from his background is truly worth $1 million.
And the mechanics of how that actually manifested in his trading are just staggering.
It's wild. This man was trading a highly funded account. He had the skills. He was genuinely a good trader.
But every time he got close to $1 million.
Every single time his account crossed the $1 million mark, a subconscious alarm bell would go off in his brain. It was a literal threat to his identity.
So what did he do?
He would unconsciously sabotage his own trades. He'd make reckless decisions, widen his stops, until his balance dropped back down into the high $600,000 range.
Wait, he would intentionally but subconsciously lose over 300 grand just to feel comfortable again?
Yes. And he did this for 10 years.
10 years.
10 solid years of hitting that ceiling and bouncing back down. He didn't realize that his perceived self-worth was acting as an invisible barrier.
That is just sad, honestly.
It is. His brain genuinely felt safer being a blue-collar guy with 600 grand than a wealthy executive with $1 million.
That is wild. So how does a trader actually identify and break these subconscious ceilings? Because it seems like you could be fighting a ghost for your entire career and never even know it's there in the room with you.
It requires a massive shift in how we view the utility of money itself. There's another famous story in this field about a highly successful trader named Mitch.
Oh, I've heard of Mitch.
Yeah. But back before he was consistently profitable, when he was still struggling with these exact demons, he carelessly blew $750,000 in a single trading session.
I just want to pause and let that number sink in for a second. $750,000 evaporated in a matter of hours.
Poof, gone.
The physical sickness you would feel in your gut, I mean, that is life-altering money.
It's absolutely devastating. And for Mitch, the money wasn't even the core issue in that moment.
Really? What was?
He was utterly terrified to tell his wife. He was certain she would pack her bags and leave him because he had tied his value as a husband and as a human being entirely to his financial performance as a provider.
Which is such a common trap, especially for men, right?
It is immensely common.
Yeah.
But when he finally broke down and confessed to her, she didn't yell. She didn't leave him.
What'd she do?
She simply held him, and they cried together.
Oh, wow.
Yeah, and in that exact moment, something broke inside him, in the best possible way. Mitch realized he was loved regardless of his trading performance.
That's a huge breakthrough.
Massive. Winning or losing a trade no longer defined his worth as a person. He finally realized that money is just the grease that makes transactions happen.
It's a tool.
Exactly. It's a tool, not a scorecard for your human value. Once he completely detached his personal value from his trading account, he was freed from that crippling anxiety.
And he went on to be incredibly successful.
Oh, yeah. He eventually made hundreds of millions of dollars.
Yeah.
But overcoming those limitations requires deep self-compassion, not the tough guy alpha mentality we talked about earlier.
Okay, so knowing you have emotional baggage is one thing. Having a beautiful breakthrough in your living room with your spouse is amazing.
Sure.
But fixing it live in the moment when the market is moving fast and the pressure's on, that is a completely different challenge.
It's just the hardest part of the job.
How do we practically reorganize the mind when we're staring at a screen? Because the data points out that day trading is a massive drain on your cognitive system.
Huge drain. It's often compared to stomping the gas pedal on a 1965 GTO muscle car. You just burn through your brain's glucose incredibly fast.
Right. And human beings evolved to rest, what, 90% of the time?
90% rest and experience acute, life-threatening stress only 10% of the time. Day trading flips that ratio entirely.
Which is a recipe for disaster.
Total disaster.
Yeah.
You are sitting in a state of hypervigilance and high stress for hours on end. And the brain simply cannot sustain that.
So what happens?
After an hour or so, your prefrontal cortex, the logical planning part of your brain, becomes completely fatigued. It essentially goes offline. And when the logic center shuts down, the primitive emotional brain gladly takes over the steering wheel.
So what is the very first practical step a trader can take to stop that hostile takeover from happening?
Believe it or not, the first step isn't psychological at all. It's strictly physiological.
Really? What is it?
It's diaphragmatic breathing.
Just breathing.
Deep, intentional breathing. When you are stressed, You unconsciously hold your breath, or you take very shallow breaths right from your upper chest.
I definitely catch myself doing that when a trade is tense.
We all do.
Mhm.
And that sends a physical signal directly to your vagus nerve, which tells your brain, hey, we're in danger, initiate the fight or flight response.
Oh, so the shallow breathing actually triggers the panic.
Exactly. Deep, rhythmic breathing from the diaphragm manually overrides that system. It physically forces your heart rate down and sends a signal of safety back to the brain.
Wow. I've also seen a very specific, almost uncomfortable exercise recommended for this, the mirror and camera technique.
Oh, that's a brilliant one.
Traders are advised to literally record themselves on video or place a physical mirror right next to their monitors while they're trading. What's the mechanism behind that?
It's all about breaking the trance.
The tr
Yeah, when you're staring at a chart, you're entirely externally focused. You don't even realize that your jaw is clenched tight, your shoulders are creeping up by your ears, and you haven't taken a real breath in 2 minutes.
You're just a ball of stress.
Exactly. When you force yourself to look over into that mirror, you physically see the tension. It brings immediate, shocking awareness to the fact that your body is preparing for a physical street fight with a line on a graph.
That is so crazy when you put it like that. Okay, so once you breathe and break that physical tension, we get into a concept called second-order metacognition.
Yes. Now we're back in the psychology.
But wait, if my logical brain is fatigued and my primitive brain is screaming danger, how am I supposed to suddenly step back and calmly observe myself? Isn't the observer part of my brain offline?
That is exactly why the breathing absolutely has to come first. You use the breath to physically reboot the prefrontal cortex.
Oh, okay. That makes sense.
Once that logical center is back online, then you can employ metacognition. It's basically the practice of learning to observe your self-observing.
Give me an example of what that looks like in a trade.
Sure. Instead of just blindly reacting to fear and hitting the sell button, you create a tiny gap of space. You step back and say to yourself, I am noticing that the urge to move my stop loss is really gripping me right now. Why is that urge present?
You question the feeling.
Exactly. And you realize, oh, it's because I don't want to admit I was wrong. You create distance between your actual consciousness and the emotion. You recognize that you don't have emotions. Emotions have you.
Man, that is powerful.
Yeah.
And to help with that, there's this concept of finding a symbolic representation of discipline, right?
Yes, an archetype.
Finding an archetype to channel during a trade. I've heard of traders using the image of a Roman centurion.
The centurion is a fantastic one.
Right, because they represented ultimate, unwavering discipline under extreme pressure. They held the line. Others might use a lion or historical figures like Winston Churchill. It's almost like method acting for traders.
It really is like method acting. You find the essence of discipline, and you actively embody it. And you must learn to feel that discipline physically in your body. It's not just a passing thought.
It's a posture.
Exactly, it's a posture. You develop a psychological committee in your mind, led by this ruler archetype, to maintain order when the primitive brain inevitably tries to stage a mutiny.
But hold on, let me play devil's advocate for a second here, Marcus.
Go for it.
There are plenty of quantitative traders and algorithm developers out there who say all this psychological stuff is just fluff.
I get that all the time.
They claim that all you really need is a strong mathematical edge or a proven back-tested strategy, and the psychology just doesn't matter. Just follow the math.
The ultimate reality check for those people is a very simple question.
What's that?
Are they consistently profitable over a long period?
Ouch. That cuts right to the bone.
It does. Because even with a mathematically perfect strategy, a human being still has to execute it. And your emotional brain will hijack the execution if you aren't vigilant.
So the math doesn't save you from yourself.
Not at all. A flawless strategy means absolutely nothing if you widen your stop-loss order out of pure fear. The moment you move your stop-loss down just to give a losing trade a little more room to recover, you are no longer trading your strategy.
You are gambling.
100%.
Yeah.
Your mathematical edge is completely gone, and it's been replaced by hope. And hope is not a trading strategy.
Okay, we've spent a lot of time talking about managing failure, stress, and fear. But let's look at the other side of the coin. What happens when you finally get it right?
Oh, this is the scary part.
Right. If I hit a massive trade, my brain should finally relax and feel safe, right? But everything I've read points out something totally counterintuitive. Winning can actually be the most dangerous moment of a trader's entire career.
It is incredibly dangerous.
Yeah.
To understand why, you really have to look at how the brain actually learns. The brain evaluates competency and reorganizes its neural pathways through failure, not success.
Because failure forces you to adapt.
Exactly. Success, on the other hand, is the second demon.
Because winning hits the dopamine button.
Hard. Winning triggers a massive release of dopamine. It creates a euphoric state that is neurochemically very similar to doing a line of cocaine.
Wow.
Yeah. And euphoria completely ruins the disciplined trading mind. It creates this false, intoxicating belief that you have finally figured the market out.
Yeah.
You think you possess some special intuition.
So you get arrogant.
Arrogant and reckless. This leads directly to reckless confidence, over-leveraging your accounts, and just completely ignoring your own risk management rules.
So winning bid is like thinking you have completely tamed a wild animal just because it let you pet it once.
That's a great way to look at it.
You let your guard down, you step into the cage, and it's a completely false sense of safety.
Precisely. You never truly have it. You never tame the market. The market is an uncontrollable force of nature.
So what are we actually doing then?
What you do is learn a psychological system to soothe your ancient primitive brain for an hour at a time. It requires eternal vigilance. You have to treat your wins with the exact same emotional detachment as your losses.
To maintain that detachment, how should a trader practically view their losses? Because, I mean, a red number on a screen usually triggers a cascade of shame and panic for most people.
You have to fundamentally redefine what a loss actually means. You must objectively categorize every single loss into one of two buckets.
Okay, what are the buckets?
It is strictly either a method mistake or a psychological mistake.
So a method mistake means the strategy itself just failed. You followed every single rule, your setup was perfect, but the market just went the other way.
Yes, that's a method mistake.
Yeah.
And a psychological mistake means you broke your own rules. You forced a trade out of boredom, or you held on too long out of greed.
Okay, that makes sense.
Now, here is the paradigm shift for your listeners. If you executed your trading plan perfectly without a single psychological mistake and you still hit your stop loss and lost money,
Yeah.
that is not a failure. That is simply a probability playing out. You actually succeeded as a trader in that moment because you followed your discipline.
Let me repeat that because it is so vital. A loss is not a failure if you executed perfectly.
Exactly.
That just changes everything. Let's bring this all together. The market isn't just a place to make money. It is the ultimate mirror for your emotional state.
It really is.
To actually succeed and survive out there, you have to completely detach your inherent self-worth from your financial portfolio. You must accept a world of probabilities over the illusion of control. And above all, you have to remember to simply breathe when that primal, ancient brain tries to take over the steering wheel.
It's all about building an empowered mind. A mind that leads from discipline, impartiality, and self-awareness, rather than leading from primal fear and unchecked greed.
Marcus, this has been an incredible conversation. Before we wrap up, I just want to give a quick reminder to everyone watching. The insight, strategies, and stories we shared in this deep dive are purely for educational purposes and sharing personal experiences. They are absolutely not financial or investment advice. Financial trading always carries significant inherent risk. You need to do your own research, deeply understand your own risk tolerance, and take full responsibility for your own financial decisions.
Education is crucial, guys, but applied discipline is what actually protects your capital in the long run.
Exactly, well said. So the next time you log into your brokerage account or pull up a complex trading chart on your screen, I want you to take a deep, slow breath. Ask yourself a question.
Are you really looking at objective market data?
Or are you just staring into a mirror, waiting to see your own fear and greed stare right back at you? And it makes you wonder if the global financial markets are really just a massive mirror reflecting the primal fears of millions of humans at once. What does that say about the billions of dollars in AI algorithms trying to trade against us every second?
That's a scary thought.
Are those computers really beating our math, or are they just preying on our 6 million years of evolution? Something to think about. Thank you for joining us on this deep dive, guys. We'll see you next time.